The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Oh, let me fix my microphone here. That's better. Good afternoon. Happy Hump Day. Happy Wednesday. Welcome to another edition of Breakout Investing on TFNN. The number to use is the same as it's always been, 877-927-6648. You can catch Breakout Investing now 5 days a week on TFNN from 3 to 4 Eastern. If you can't listen live, no worries. Head over to iTunes. You can download a podcast, easy to do. And if you want to listen to TFNN on your smartphone, that is easy as well. Just open your smartphone browser, plug your earbuds in, type in tfnn.mobi, tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. Don't forget about Tiger TV on the homepage of tfnn.com. You watch Tiger TV, not only do you hear the show live, but you can also look at charts right along with me. Channel 1, the show is carried live. Channel 13, it is archived. And you can also watch Tiger TV on your handheld device as well. All right. Hey, market that is still acting strong here. NASDAQ Composite just unwilling to give back big gains in the month of August and September, for that matter. I thought September was supposed to be a rough month for stocks. Wasn't that what the headlines were saying as August came to an end and we started the month of September? So far, indices have nice gains for the month of September. NASDAQ Composite right now up near its session high, just off its high, up 10 points, 0.3% to 3187. And we'll check in on the S&P 500 with less than 1 hour to go in Wednesday's session. We'll see the S&P 500 also up near its session high, now up 5 points, almost 0.4% to 1464. So, I'll reiterate what I've been saying about this market. Until I start to see meaningful sell signals in the market, there's no reason to take a decidedly bearish stance here. I'm not going to pull out my crystal ball and say that, well, the market has to come down from here. It's run too far, too fast. The bottom line is we're still looking at a market here that is under some form of accumulation. We know there aren't any sellers around. It's easy to complain daily about the lack of volume, but even in the S&P 500 in the month of September, there were some decent volume pushes behind up days. So there's been a little bit of accumulation going on here, and it's a market under accumulation. It's a market in a confirmed uptrend. It's a market that is dishing up small cap, mid cap, large cap stocks on a daily basis. I will say that the crop of buy candidates is shrinking a little bit. There's still a lot of good action out there, but when I initiate a position in my Ultimate Growth Stocks model portfolio, I tend to do that when a stock is coming out of a base and in heavy volume. It's been moving sideways, consolidating gains, and there was a lot of action like that back in late July, early August, through the month of August. Right now, base breakouts are still out there. We'll go over a few today, but the crop is definitely getting smaller. So what I plan to do, I've got 10 or 11 stocks in the model portfolio right now, and many, like the market, are holding gains nicely. Some are going to move sideways. They're not going to revisit their swing points. They're going to hold above their most recent buying areas. They're going to move sideways and form good bases, and they may attempt new breakouts in coming weeks. Others are going to hold gains, move sideways, show some tight weekly closes. I'll show you really strong performer that is showing some tight weekly closes here as well. That could have a little more left. It's made a big run already, but its strength, its relative price strength, can't be ignored. So indices up near their session highs today. We've got a little bit of volume in the market, not a whole lot here. Let me check and see. Where we're at here. Pull up my trusty volume source. Every day I go over to investors.com, and up at the top of their homepage, they kind of give a running tally of how volume in the indices is trading. Yesterday we had volume on the New York Stock Exchange below average at 628 million shares. It's tracking pretty close to that right now, maybe just slightly higher. NASDAQ volume on Tuesday was average at 1.67 billion. We're tracking about 5 to 10% higher than that today. So indices near highs, not a whole lot of volume in the market. Let's check in on shares of Microsoft inside the Dow. Late yesterday, Microsoft's board approved a quarterly dividend of 23 cents a share, up from its current payout of 20 cents. It's going to give it a yield of close to 3%. Stock isn't moving much on the news, but technically it still looks pretty good here, holding above its 50-day moving average. Shares of Microsoft just down a little bit today, down 6 cents to 31.11. Wanted to check in on the VIX here. The VIX still can't get out of its own way. It had this reversal back in early September. This was September 4th when the VIX reversed. From this point, it's lost about 22%. So it's in rough shape. It's down another 3.7% today to 1361. So as long as this VIX stays weak, this is definitely a feather in the bull camp, no doubt about it. Checking in on crude oil today. Crude for October delivery took a big hit, fell $3.31, 3.5% to 91.98 a barrel. That's a 6-week low. We'll check in on the USO here and see that it is under quite a bit of pressure after trying to get back above its 200-day moving average here. Again, you can see this in Tiger TV. The United States Oil Fund got turned away at the 200-day moving average, and it plunged through its 50-day moving average today, down 3.9% currently to 34.17. So will lower lower oil prices result in lower gas prices? Hopefully. Gas is very expensive out here in California. We could all use a break from the pump, but interesting how gas prices don't always move in unison with oil prices. You'd think lower oil prices would eventually translate to lower gas prices, but recently that has not been the case. Gold. Let's take a look at gold. December gold gained 50 cents, or less than 0.1%, settled at $1,771.70 an ounce. Gold was helped, I guess, a little bit by news out of Japan earlier today. The Japanese central bank said it was announcing more easing measures. It's increasing its asset purchasing fund to $700 billion from $575 billion to offset recent strength in the Japanese yen. So easing measures by Japan going to weaken their currency as well, just like easing measures by the Fed is weakening the dollar. Speaking of the U.S. dollar index recently trading around 79.07, down about 18 ticks. This is a chart of the greenback as of Tuesday's close, and oversold. Probably. It was working on 2 straight days of gains going into today, but again, down 18 ticks currently to 79.07. Just not clear to me, even though the U.S. dollar index is pretty close to some long-term support in that 78 area. Not sure it's going to be able to rally meaningfully from here. If it does, you'd expect the buyers to start, or selling to start to come into the euro, and the euro is in a nice uptrend. Just like there's been a lot of sellers in the dollar, the FXE, the currency shares Euro Trust, you can see the rally that it has been on pretty much since early August. So you probably need to see a breakdown in this FXE to bring buyers into the dollar. And again, just not seeing any sell signals despite a big run for the currency shares Euro Trust. So, strong euro, weak dollar still seems to be in play here. Had some housing data earlier today we can take a look at. Housing starts climbed in August to an annual rate of 750,000, just off a 4-year high, but economists were expecting a much bigger jump to 770,000. Starts in July were revised down to 733,000 from an initially reported 746. So overall, housing start data disappointing. But the good news was in existing home sales data. That came out at 10 a.m. Eastern. Sales of existing homes surged 7.8% in August to 4.82 million units. That was well above the consensus estimate of 4.58 million. The median existing home price gained 9.5% from a year ago to just over $187,000. Remember, Goldman reiterated bullish comments on the home building sector. It named a few of its favorite names. Let's check in on MDC Holdings. Home builders, doing pretty well today after 2 straight days of declines for most stocks in the group. MDC Holdings is up 2.7% today to 38.72. And let's take a look at a weekly chart for MDC. This was a difficult stock to buy because the last time it came out of a base was back in the summertime, June or July. Here was the breakout right here, but this was kind of a strange base to buy out of because you see 3 weekly price swings here, really 3 ugly reversals. Typically, when a stock consolidates gains and it forms a base, you like to see the tighter the trading, the better. This really came out of a volatile consolidation, so it would have been a tough buy. It would have been the right time to buy, but it was not a great base to buy out of. But MDC, even though it has ridden its 10-week moving average higher since its breakout this summer, it's an extended stock. Now, I talked about the fact a lot of these big, strong performing stocks, it's possible that they could continue to show good technical action going forward. Now, you see the MDC where it closed last week and where it's currently trading this week. You see how it's not giving up much ground, and if a stock just kind of holds on to gains week after week and flashes a series of tight weekly closes, it's usually indicative of a stock under accumulation, and sometimes it can presage even more price strength. So you definitely, even though there are probably a lot of breakouts that you've missed in recent weeks, there's a lot of secondary buy points could present themselves in coming weeks. So you want to pay attention to stocks that are holding gains smartly. We could see this in the home building sector. My general take on the home builders is that they are too extended right now, but if they move sideways, consolidate, take a little breather, you could get another opportunity to get in. So when we come back, I want to take a look at a few more home builders, including Ryland Group. Big volume in Ryland Group today. So overall, good day for the home builders on better than expecting existing home sales data. Lots more show to come, folks. 877-927-6648. Give me a call. Let's talk about this market. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Thanks very much for tuning in. 877-927-6648. Folks, don't forget to check out 30 days free of Ultimate Growth Stocks. That's my newsletter at TFNN. You can sign up right on the homepage. Click on the investment newsletters, newsletters tab, then investment newsletters on the page, and you can get more information about Ultimate Growth Stocks. I publish every Tuesday, and then I send out email alerts in between weekly updates to keep you up to speed on what is going on with this market. So, and again, it's a market that is still acting pretty darn well here. Still seeing a good amount of leadership out there. A lot of people will complain about weakness in the transports. Remember, yesterday we had decent bottom line and top line growth from FedEx, but its outlook disappointed. That fueled some selling in the IYT, the Dow Jones Transportation Average Index Fund, down sharply on Monday and Tuesday. It is bouncing back today, up 50 cents, a little more than 0.5% to 91.35, but still some technical damage here that this fund is going to have to overcome. But, so far a decent day for the market. About 35 minutes left to go in Wednesday's session. We've got the Dow holding on to a 39-point gain, 13,603. Really, all the indices are the same percentage gains here. The NASDAQ Composite up a little more than 9 points to 3187, and the S&P 500 up just over 4.5 points to 1463. Mentioned the better than expected existing home sales data. That's resulted in a nice rally for the home builders after 2 days of weakness on Monday and Tuesday. Let's take a look at shares of Ryland Group. Good volume in Ryland Group today. It is outperforming nicely, but again, you can see it's not hard to identify an extended stock here. Ryland up almost 6% today to 31.81. And you look at this chart and see where the last base breakout was. Exactly. It was right over $27 a share here. Here was the swing point. Here was the breakout, and it has just taken off. So it moves from 27 up to 31.81. The general rule I follow, I'm not averse to buying breakouts like this at all in the right type of market, but you don't want to chase. You don't want to buy a stock when it gets too far extended past a swing point. I think that is generally the case with most of the home builders out there. ITB is, of course, the Dow Jones U.S. Home Construction Index Fund. You can see the last base breakout here was over 17 back in August. Good breakout here. It has run higher. The ITB is up 2.7% today to $20.10. Very extended. Just got to wait for these things to base, pause, consolidate gains, and then you'll get another opportunity to buy. Coming up tomorrow on the economic data front, we have the latest reading from the Philly Fed Manufacturing Index. It's been in contraction territory for 4 straight months. In August, it came in at minus 7.1. This time around, it's expected to come in at minus 4. So a little bit better, but another reading of contraction is expected. Also tomorrow, weekly jobless claims are seen falling to 375,000 from 382,000. Let's take a look at some headlines today. How about Questcor? I mean, just unbelievable what has been going on in this stock lately. I don't even know how you interpret the chart at this point, but it was, there was some distribution definitely in the left side of the base here in July. This is when Citron Research, a notorious short seller in the market, started to raise sales concerns about Questcor's Acthar gel, which is used to treat multiple sclerosis, a rare kidney disease called nephrotic syndrome, as well as infantile spasms. So you had a lot of distribution on the left side of the base here, but then Questcor had been in rally mode and was forming a nice little handle area. So you had a base taking shape. It tried to make a move yesterday, finished near its session low, and then what happens? The stock is down 44.6% today to $27.98. Listen to these headlines. Citron Research comes out with a report that health insurer Aetna is limiting coverage of Acthar. Questcor came out and said that Aetna's decision to change its reimbursement policy is not going to be material because Aetna only accounts for about 5% of shipped Acthar prescriptions. So Acthar says it's not material. You see a stock down 44.6%. I mean, whew. Don't want to go near this one, and this is really a good lesson. I know a lot of people, they see good technical setups, they cheat, they buy early. Always better not. Breakouts aren't going to work all the time, but you're much better buying on a heavy volume breakout rather than buying in anticipation of a breakout. Questcor is just a mess here. Oppenheimer raised its price target yesterday. Not timely at all. All right, folks, we'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN, 877-927-6648. Let's head out to Orange County, California. Talk to my friend Garo. Long time no speak, sir. How are you?
How are you, sir?
I'm great. Nice to hear from you.
Thank you. Thank you. Thank you. Regarding that GTAT, I've been trading this for a pretty long time. What's your idea regarding this? Today it booked that 200-day bull, 200 a simple moving average, and the other one exponential.
Yeah, GT Advanced Technology, very liquid stock here, trades about 2.8 million shares a day. It is a smaller speculative name, trading around $6.90 right now, market cap of around just over 800 million. So, my quick take, Garl, on GT Advanced Technology is that it technically, it actually looks fairly compelling here. There have been several instances where, the stock has shown signs of accumulation. Some big money moving into the stock. You mentioned it is back above its 200-day moving average. As you know, when I look at a stock, I want to see a good chart, and I also want to see pretty good fundamentals. So fundamentals here are kind of lacking. The sales growth in their latest quarter was down 28% from a year ago, so I don't really have a feel for the stock fundamentally. Technically, it looks somewhat compelling here.
Okay. Do you think this will go up to $9 in time?
Yeah, maybe $8.50. It looks like it's still it has a recent high of $8.61 that was set all the way back in March. I think it was mid March. So right. It's definitely under accumulation here. That's a big positive. I like the price and volume trends. The fact that it has cleared some pretty significant resistance here means that $9 possibly, but 850, 860 looks to be the first area where it could face some selling pressure.
Very good. Very good. Thank you, sir. Thanks so much.
Okay. All right, Carl. Thank you.
Thanks.
Yeah, I get asked, about stocks all the time, and it's hard for me. I mean, this is a very speculative stock, no doubt about it. GT Advanced Technology, market cap below $1 billion. It's also a stock that's still far off its 52-week high. I mean, this back in the summer of 2011, it was a $16, $17 stock. Now it's a $6.90 stock, about 30% off its recent high. That said, it has made a move from 4 up to close to 7. Its weekly chart does show signs of accumulation. So technically, put it this way, I've seen stocks much worse. So could see a little more upside in GTAT, but overall, not my cup of tea. All right, taking a look at some other headlines today. Speaking of beaten down stocks, shares of Groupon catching a bid today, up 12.5%. Look at that, to $5.28. The online daily deals site launched a new mobile payment service for the iPhone and the iPod Touch, actually. Groupon said the system will give businesses the ability to take credit card payments at a lower rate than other providers. The service is called Groupon Payments. Meanwhile, shares of Goldman Sachs, let's see how this stock is reacting on news that its CFO is going to retire in January 2013. Goldman Sachs, financials have been acting very well here. Goldman definitely is included in that group. It's been drifting lower in light volume over the past 3 sessions, down 41 cents today to 119.47. Again, CFO David Viniar is going to retire in 2013. He's going to be replaced by Harvey Schwartz, who currently is the global co-head of Goldman's securities division. Schwartz joined the firm in 1997, was made a partner in 2002. He currently serves on Goldman's management, risk, and business standards committees. Taking a look at shares of Yahoo. Yahoo was in the news, but boy, very interesting price action. Stock, a big intraday trading range yesterday. The stock hit an intraday high of 16.13 today. It is trading at 15.90 right now, down a penny to, again, 15.90. Yahoo's going to return $3 billion to shareholders, maybe in the form of a dividend, maybe in the form of a share repurchase. But Yahoo is selling its 50% stake in China internet firm Alibaba. Yahoo received about $4.3 billion in net cash proceeds from the sale, so it's returning a lot of that money to shareholders, and that's what longs were hoping for. I don't think they wanted to see Yahoo go out and try to reinvent itself and make all these costly acquisitions. That does not seem to be in the cards, at least right now, for Yahoo. Stock kind of ho-humming the news, however. Take a look at shares of General Mills. General Mills, large cap name here. Cheerios, popular brand. Nice, good, solid breakout today, over $39.76. Like the move in General Mills today. Earnings were only up 3% from a year ago to 66 cents a share, but that was 3 cents above estimates. Total sales rose 5% to $4.05 billion, just a hair below estimates. International sales doing well. They rose 27% to $1.09 billion, I should say. Results at General Mills were helped by its Yoplait International acquisition. Also on the earnings front, AutoZone. Let's take a look at shares of AutoZone, up $12.05 today, 3.4% to $369.89. I wrote a piece on AutoZone over at Benzinga earlier today, still saying that this stock is technically challenged. It was sharply lower in pre-market. Buyers have come into the stock today, but this one is still in a technical downtrend. And when you look at its weekly chart. Let me just pull up a weekly chart here for AZO. You see a stock that has made a massive price move already, has been consolidating gains for several months now, and it's just highly unlikely that this is going to be able to stage a true technical breakout anytime soon. It just still looks like a damaged chart to me. Earlier today, the company reported fiscal fourth quarter profit of $8.46 a share, up 18% from a year ago. Sales rose 5% to $2.8 billion. The sales were mostly in line with expectations. Earnings per share about 5 cents above the consensus estimate. Same-store sales in the quarter rose a disappointing 2.1%. That was below the company's expectations and was also down from 4.5% growth in the year-ago quarter. And finally, in the earnings front, I should say, Ascena Retail Group has recovered after early weakness. The stock hit an intraday low of 1983, trading up near its session high now at 2080, only down 21 cents. Numbers were pretty good here. Earnings up 29% from a year ago to 31 cents a share. Sales up also 29% to almost $940 million. Sales were helped by its acquisition earlier this year of Charming Shops in May for $890 million. And let's see here. Ascena owns brands like Dress Barn, Maurice's, Justice brands. Same-store sales in the quarter rose 3%. Its Justice brand is doing particularly well because same-store sales there were up 5%. Take a look at some interesting stocks here, names on my radar. Let's take a look at MasterCard. I kind of like the way MasterCard is trading here. See, last week the stock made a big move. It's down for 4 straight days, but it's really not giving up much ground here. It could be forming a little handle area. You see how volume is getting lighter and lighter and lighter. Can't rule out a breakout in MasterCard. There was one point where I really had to give Visa the vote. If you're kind of weighing, do I own Visa or MasterCard? But MasterCard is definitely looking much more interesting than it was, say, back in May and June. But shares of MasterCard now down 45 cents to $452.53. If this market stays healthy, can't rule out a breakout for MasterCard. Technically setting up nicely here. While we're at it, let's take a look at Visa. Visa continues to look pretty good, holding near highs. Definitely Visa has shown better price strength than MasterCard in recent months. Of course, Europe has been a big overhang for MasterCard because, simply put, MasterCard has more exposure to Europe than Visa does. And with European headlines sort of quieting down here and the Eurozone trying to get their house in order and making progress, shares of MasterCard have come back to life. So MasterCard looking interesting. Visa continuing to show relative price strength. Impax Labs, this is a generic drug maker, making a nice move today, up 3.7% to $25.76. Finally making some progress after a recent breakout over $24.89. Here was the swing point back here in August. It passed the swing point, couldn't make much progress, but buyers in the stock in spades yesterday and today. So it looks like that breakout is finally gaining some traction. Take a look at shares of Sherwin-Williams. You know, a lot of stocks have just been moving higher and higher and higher. I heard David White before my program talking about Disney, stock that just is not going down, and Sherwin-Williams is still in that boat as well. But, you know, another example of an extended stock out here. It's just very difficult for me to say it's okay to buy after a huge price run. Sherwin-Williams is a paint and coatings maker. Earlier today, the stock was initiated by RBC Capital as a top pick. It is up 2.6% today to 149.26. But you can see the last time it came out of any sort of base was back here in July, and it has just kept going. But last buying area was right around 132, 133. At 149, you know, the train has left the station, so you don't want to chase this one. Let's take a look at shares of Expedia as well. Some new names popping up in my screens here. Expedia, you know, forming a base. Base looks pretty good. Came down to its 50-day moving average. Expedia outperforming nicely today, up 2.6% to 56.25. This is another stock that could have more left. We'll just have to see if the base completes properly. And actually, this is. Let me just pull up a weekly chart here for EXPE, and you can see the stock is, it's formed a series of bases here. Last true breakout for the stock was back in April, May. See, it broke out over $35 a share, came down to its 10-week moving average. So you could either interpret what's going on right now as the second pullback to the 10-week moving average, or simply a new base forming. Either way, could try to see this stock break out over 60 in the not too distant future. So shares of Expedia acting pretty well. Wanted to check in also on shares of Salesforce.com. The company is currently doing its Dreamforce conference in San Francisco. eBay looking, not eBay, Salesforce looking pretty good here, up $1.90, 1.2% to $158.19. Earlier today, the company introduced a new version of its cloud-based sales application with enhanced mobile computing features. Salesforce is getting a lot of competition these days from Oracle and SAP. They're trying to get into that business of software delivered over the internet. Salesforce still acting quite well here. A lot of people like this stock. It arguably is the leader in the field of customer relationship management software, still growing nicely. High multiple stock, but it continues to deliver very, very strong top-line growth quarter after quarter. CRM technically looks good here. Here's another CRM maker, customer relationship management software, NetSuite, just showing incredible price strength here. Recent breakout for NetSuite over, call it $59 a share, broke out last week. And this is what, again, I like about this market. In an unhealthy market, in a choppy market, you see these breakouts and then you see these reversals in heavy volume. You're just not seeing any of that because buyers are in control. Sellers are having a hard time getting anything going. Certainly a difficult market to be short during a market uptrend, but shares of NetSuite continue to hold on to gains very, very nicely. Had a question earlier today about SolarWinds, SWI, another stock that is just showing uncanny strength. This is a company that makes network performance management software. Just incredible relative price strength. No sellers at all in this stock, and we'll see that it is up 35 cents today to 59.78. This is just a tough one to buy up at its current level, but let me just show you what the you had a breakout recently over 56.94, and And now you have, I'll tell you what, when we come back, I'm going to take a look at a weekly chart for SolarWinds, because this is an example of a stock that even though it has moved quite a bit over a short amount of time, it is showing tight weekly closes in its chart, and that is worth paying attention. So it could have more left. I think that, a lot of money has already been made in this name, but if this market rallies into the end of the year, this one could have more left. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. Quick check on the markets. 5 minutes left to go in Wednesday's session. Dow still holding on to a 35-point gain, up 0.3% to 13,599. The Nasdaq up 7 points, 0.2% to 3184, and the S&P 500 up close to 4 points, 0.3% to 1463. So, headed into the break just a moment ago, I have been getting some questions about Solar Winds, a stock that has been holding gains very, very nicely. The issue I have with Solar Winds, I don't own this stock for my Ultimate Growth Stocks model portfolio, although it is a stock that has a lot of characteristics I like to see: good fundamentals, good growth prospects, innovative product, strong relative price performance. But when you look at a weekly chart here for Solar Winds, you see just a series of multiple breakouts here. You had a breakout in October, November last year, and then it broke out 3 separate times already in 2012. So you see a breakout here, breakout here, breakout here, breakout here. And what's interesting is that it is these tight weekly closes that you want to see. 2 weeks ago, Solar Winds closed at 59.26. Last week it closed at 59.70. Right now it's trading at 59.77. So it's just not giving up any gains, and price strength like that is worth paying attention to. My personal preference is to buy a stock in the earlier stages of a move. I can't say that Solar Winds is in the early stages of a move here. That's kind of my main complaint. That said, it still could continue to work because this company, again, network management software, it continues to see strong demand, and Solar Winds has proven itself to be a strong company. Let's take a look at shares of Fortinet, FTNT. Haven't looked at this stock lately, but it is building a nice base here. Shares of Fortinet up 1.1% today to 27.58. It has been in rally mode basically since July. Good fundamentals here. Let's take a look at a weekly chart for Fortinet, and we'll see a big base forming here. Actually, maybe a little bit of a cup with handle pattern forming. You are still seeing base setups out there. These concern me a little bit because, again, the real big leaders tend to come out in the early stages of a market rally. We had confirmation of a market uptrend back in late July. The market has worked nicely since then, but some of your stronger base breakouts happened weeks ago. So some of these stocks that are setting up now, making a case they want to break out, they could work, and Fortinet is a strong enough company with decent enough institutional support that you could see a breakout here too. So a good one to watch. Fortinet. One name that's not looking so good here, former leader Stratasys, a maker of 3-dimensional prototyping systems for the manufacturing industry, takes out its 50-day moving average yesterday in heavy volume. It is extending losses today, but not by much, down only 7 cents to 58.77. But I would not be buying Stratasys down here. Usually when a stock gives up its 50-day average in heavy volume, it's a sign that the stock is ready to base for a little while. Coming up after the close, Adobe Systems is going to be reporting earnings. ADBE, of course, Adobe known for Photoshop, PowerPoint. Adobe had a rough day yesterday, but it is bouncing back today, up 1.7% to 33.13. Again, earnings after the close expected to come in at 58 cents a share, up only 5% from a year ago, with sales up 9% to $1.1 billion. And another well-run retailer set to report after the close. We'll take a look at Bed Bath & Beyond, up 35 cents to 68.74 ahead of the results. It has been under selling pressure as well, trying to bounce back a little bit today. We'll see what Bed Bath & Beyond has to say after the close. Coming up next, the Tom O'Brien Show. Thanks very much for tuning in. I'll be back tomorrow at 3 o'clock Eastern with another edition of Breakout Investing. Have a great afternoon.